All right, we want to keep the discussion going on the tariffs and how it is affecting markets, because all these continued threats about new tariffs are clearly hurting stocks today. Right now, the Dow down more than 400 points. Joining us now to discuss the markets, Hilary Kramer of Kramer Capital Research. Hey, Hilary.
Hi.
Thanks for coming on. Let's start with the sell-off right now. We have to, because down more than 400 points. You thought maybe we had seen the worst of the damage, I guess, on Monday, the way we closed on Monday. So what do you make of what's happening right now? And is it right to chalk all this up to just trade war jitters?
A lot of it comes down to earnings, though. Earnings were very mediocre. So sometimes we blame everything on one particular thing, but really it's a cascade of events that take place. So you have mediocre earnings, you have global weakness, which obviously we see because we're, whether it's New Zealand or Thailand, we have rate cuts all across the board globally. And that's bringing the market down. And there's concerns what's really going on in China, what's really happening there, because it could be a house of cards, right?
And look at the yuan.
But Hilary, how much more pain ahead? Because this week has been brutal. A lot of people were expecting some sort of correction of sorts, but how much more pain?
We could maybe see 2 to 3% more down, but we will have some stability here because even though over the very long term, I don't believe in the Federal Reserve solving all of our equity issues and being involved with the stock market, in the short term, the Fed will step in and we're going to hear more comments from Fed Chairman Powell saying, look, we have 8 more bullets to go. We've already used 1, but 8 more. And then suddenly we're going to have stability. Now, the big unknown is whether or not the Chinese, though, are going to wait until after the elections to really start negotiating, because we all thought that by year end 2019 we would have a trade deal, and that would bring that uncertainty to a close in the market. But now it seems that it could be the Chinese are saying, wait, let's wait it out, and it may even be getting personal at this point, right? So
it's
just a little bit. but I mean, you're saying that we're waiting for Chinese. Maybe they'll come to the table in 2020 or after the elections. But September 1st is coming. I mean, no matter what, we're going to see that increase in tariffs. So is that possibly what investors are reacting to? Is that from now to September 1st, we don't expect a Fed rate cut before September 1st. So is that the reason why we're getting this up and down, and we can expect that to continue this week, next week?
Now, Trump has pushed the dates before, I will say.
Mm-hmm. He's pushed the dates and he's pushed the amounts, and then it says...
But he has pulled the trigger, too.
Right. He's pulled the trigger, and $300 billion in the scope of all of GDP and sort of all of global trade isn't so relevant or material, but it's enough, obviously, to spook the market. And many of the areas of industry and sectors that are going to be affected, like the lobster fishermen have just been devastated in Maine. I mean, it's just horrible. They can't sell lobsters anymore, and Canada is selling all the lobsters. So much of that pain has already been felt. The question really is, what happens when it comes to earnings? What happens when it comes to our own economy? The answer is, this whole thing with the Fed and cutting rates and having all this cheap money it's very equivalent to taking a diet pill instead of really eating less and going to the gym,
working, cycling,
exactly, and doing what really needs to be done. And you can really equate the global markets to that at this point. All this inequity. Older retired people can't make any money. You have this new billionaire set that's been created from this easy, quick, free money that's been out there. The upper middle class is now the sort of lower middle class. The middle class has been devastated. Everyone's living on credit. We've really created a situation that's as bad as 2008, 2009, except that the whole global financial system may not crash, which was the problem 10 years ago.
Wow, is anything okay? Well, the U.S. is very strong by a number of metrics.
Well, you can still make tons of money in the market. I mean,
sure.
We keep making money in the market.
Consumer confidence, surprisingly good.
You can trade, you can go in very long term, you can find dividend yielding stocks that are going to make you a lot of money. There's always a way to make lots of money. Right. That's the good news.
We are talking about the Fed as well, and obviously markets have responded so heavily to everything that Jay Powell has done. Just this morning, an hour ago, we got some more Trump tweets about the Fed. We know that the president has been very vocal on Twitter about Jay Powell and the Fed. He tweeted an hour ago, "Our problem is not China. We are stronger than ever. Money is pouring into the U.S. while China is losing companies by the thousands to other countries, and their currency is under siege. Our problem is a Federal Reserve that is too proud to admit their mistake of acting too fast and tightening too much. Parens, and that I was right." I won't read the rest, but kind of a similar tone that we have seen him strike over and over, which is beating down the Fed for kind of every decision. And it's funny because complaining not about not getting enough cuts, and then we got the cut, and still markets went down because traders didn't really like what they heard from Jay Powell after announcing the cut. I mean, man, Fed just can't win.
The Fed can't win, but the Fed's job, again, just went through it. The Fed's job is not to control the stock market and make the stock market stronger. That was never the job. And what happened is that the Fed just kept going and going. And Chairman Powell was right to actually tighten when he did. I mean, that made a lot of sense because we were recovered and the market was getting frothy. That's what he said. We have to pull back the reins. As a matter of fact, this cut that we just had was due to the fact that there's global weakness. So, he's just finding ways, really, I'll just say it, to keep his job. That's what it's really about.
Well, and he said specifically, it's not really the U.S. that has been the problem, and yet you look at what's happening right now, hard to say the U.S. isn't struggling as well. We'll have to leave it there. Hilary, Kramer, thanks so much. We'll have to have you back on soon.